Hey, I'm Eric Peterson, broker at Kopa Real Estate. And in this video, we're going to be reviewing the real estate statistics for Austin, Texas for December 2023, and then talk about where we think the market's going and what we're going to be watching in the next few weeks to see what projections we can make for the rest of 2024. So let's get into the statistics for 2023 right now. Single-family homes for Austin for the 5-county area, December 2023. On January 1st, we had 6,772 active listings. Under contract, there were 2,552 homes. December 2023, there were 1,955 homes sold. That was down 15% from 2022. Average dollars per square foot was $253, and that was up just a tick. Average sales price was $559,858. That was just down slightly. And the median price was $450,000. That was down 2.2%. Average days on the market was 79 days. That was up 33%. And the highest priced home that sold in the Austin MLS was at $4,785,000. That was a home in Seven Oaks. Now, if you have plans to put your home on the market, whether it's next week or 2 years from now, be sure to sign up and attend one of our 2 free home selling workshops this year. Saturday, January 20th at 9 a.m. at the Cedar Park Recreation Center, and Thursday, January 25th at 5 p.m. at Moonshine Grill in Avery Ranch. So we put one home on the market so far this year. We actually did get a couple of offers on it that came in this morning. And I will say that we had 23 groups that came to the open house, and we've had over 10 showings in the first 4 or 5 days that we've been on the market. So I'm a lot more optimistic about the market this year at this time than I was last year for a variety of reasons. But here's what I'm really going to be looking at in the next few weeks and next couple of months to see where we're going to go for the rest of the year. Number one is looking at the inventory of homes for sale. Typically what happens is we see the inventory of active listings bottom out in January. And that's about what we're looking at right now. So if we look at this chart, this goes back 5 years. We have to go back 5 years because the last 4 years have been such crazy markets with the pandemic and with interest rates shooting up last year. But if you look at where the inventory is it's slightly elevated compared to what it was back in 2019. Not too bad, but keep in mind, these are statistics for a fairly large area. And so you're always talking about just buying or selling one house. So when you really want to have a conversation with me about your particular situation, be sure to schedule a time to talk about that and not just rely on some of these macro market indicators as well. Okay. But this is what we're looking at. I've had a lot more activity already through the first 10 days of this month compared to last year. I do expect that we're going to see more homes come on the market. I also expect that we're going to see more buyer demand. So we'll see where that shakes out. But a lot of our clients are waiting to hold off, it looks like, until February, March before putting their homes on the market. So as we sit right now, too early to tell. The story hasn't been written as far as where we're going this year. The other 2 things that we're looking at are mortgage interest rates. Now, one thing you have to remember is the statistics from December were homes that went under contract for the most part in October, November, when mortgage rates were still about 8%. And then in the last few weeks, we've seen mortgage rates come back down. As of today, we're looking at 6.77%. You may be able to get a better rate than that, or maybe a higher rate, depending on your particular situation, but just kind of looking at average rates right here. If we look back to a year ago, rates were actually lower than they are right now. So it's kind of strange. Why are we optimistic about it? Well, for one thing, the Fed has indicated that they're likely to be reducing rates 3 times next year. That's for the most part been already built into the mortgage rates. So we don't expect just because of that we're going to see significantly lower rates, right? But the expectation that rates are going to go to 10%, rates shot up so much last year at the end of the year that that really spooked everybody, both buyers and sellers, because somebody was worried that they might buy a house at 8% and then rates were going to go up to 10%, right? So kind of freaked everybody out. Today, we don't see as many people talking about rates going to 10% as we did. It looks like a lot of the inflation data is coming out. Inflation is moderating, and that has the impact on mortgage interest rates. So we're much more optimistic about that. I'm optimistic after seeing the traffic from our first listing as well. But this is something that's going to be interesting to see is where do we go from here? The builders have shown us that we really need to see interest rates in the mid 5% range in order to see significant buyer demand increasing, right? But so you say, well, what difference does it make on a mortgage, what the mortgage rates are? A lot of our more senior clients, they'll tell me that their first mortgage was 18% and all that, and that's true. Of course, sales prices were much lower, but all we can look at is the data, and you look at mortgage applications. This is a big thing that I'm looking at. We want to look at purchase applications, not refinance applications. And you can see that there's an inverse correlation between interest rates and people applying for mortgages. And people applying for mortgages, that's your demand in the supply and demand economics, right? And so looking at where we are right now, you can see that as rates go down, then mortgage applications, or these are the rates, right? And then as rates go down, right, you can see the mortgage applications tick up, right? So it's not by accident that this is what's happening. It's typically where we see. You still look at why is the market a little bit softer than it was 2 years ago. Look at the mortgage application data from 2021 and 22, right, compared to today. So not nearly as much demand, and we'll probably never see that again in my lifetime. Okay, so that's what we're looking at as far as the real estate market and going forward. As always, schedule a time with me either on my calendar or give me a call, send me a text, right? Reach out to us whenever you want to talk about the market and your situation. Thanks so much for watching. We really appreciate your support.